Yo, what's good? I just wanted to hop on here real quick and let's talk about turtle soup, okay? Now, for those who are just getting started with this concept or have some trouble understanding really how to consistently work with this concept, this video is for you, okay? First thing you always notice, right, when I'm charting or when I start my top down analysis, normally I'm on my daily chart, you feel me? Now, normally those I work with will have these indicators, okay? Weekend, Saturday, Sunday, and sessions. But these two, of course, you don't need any other indicator. You really don't. And the concept that we use is so simple that anybody who's just starting will be able to fuck with it, okay? Now, when you're looking at price from left to right, of course it's going to paint a certain picture or a narrative, you feel me? Even on a very basic level, when I'm looking at certain idea, right, downtrend and uptrend, right, if I'm just being very basic, right, with these areas, what can you see, right? Let's see, let's turn sideways. What can you see very clearly? And take 2 seconds to pause the video. Of course, no one's going to pause the video, but it's okay. So the answer is these extreme points here. And especially for US 30, these extreme points are very important, okay? And so a lot of times where people would look at these trends, they're focused so much on indicators, right? And the thing about an indicator is that it's not going to give you what we're looking for, okay? Yes, they talk about overbought and oversold, or you might use an RSI, or you might feel like there's another concept that is easier because you're looking at everything but the candles. And that's the problem. That's why you're starting with losing trades, or every time you get into a trade, you feel like it's attacking your entry point. Or it just keeps going literally the wrong way as soon as you get in. How do you prevent that? Or I'll give you one better. Ready? And again, take a look at, again, all these little swing points that I'm pointing to on the screen. Okay. Just be comfortable with some of these areas. And again, we're on a daily chart, so it's not like one day is going to give you the whole picture, but check this out, right? So now, I have all these extreme points, right? And I even have one up here. Let's put that there. That being said, I have buy side and sell side liquidity marked, okay? A bunch of us are comfortable with buy side and sell side liquidity, but with turtle soup, check this out, okay? If you've noticed that every single time price decides to go up significantly or down significantly, right? And I mean like with trending. Notice that these old highs are violated, okay? I want to point that out. Now, first thing, a lot of people ask me like, yo, what is turtle soup? Like, what is it? And the thing about it is, it's a very, very simple concept. It's simply a run on liquidity, okay? And how you activate it or how you participate using this concept, I'm not going to lie, is very difficult at first. It's hard to trust this concept until you really get to see it over time and play around with it, okay? And the reason why I'm on a daily chart is because we talk about who moves the market, right? If it's not us retailers, it's going to be banks, institutions, anybody with a really, really huge account that's responsible for, pairing with the algorithm's moves. Ready? Watch this. This extreme point. Do you see how when I drove this yellow line from the top of this high to obviously extend it, and I put it through this candle here. Talk about this purple one. Notice the, and I need a certain tool for this. Notice this wick standing out. And I mean right before a massive move, right? Massive move. And of course, you already know that if you just run US 30 for a couple of points, that's a lot of money. And look how many points you get. So if you run this old high at 34, what, 108, notice how we trend down, and we take out another, check this out, and I'm going to use this word, right? I like it a lot. Extreme point. See it? So if I drag this, right, same idea. Watch this. Drag this up, extend it. So how many times do you think I could have ran this idea, right? So same thing here. It runs that low, and check this out. Even if you want to use this one too, you can also do that. And the lowest low, again, it's going to be not the lowest, but it's going to be in a position to where, same idea, right? So what am I pointing to? I'm sure you can already see it. There's a little tail sticking out, right? For me, it's like a tail. I see tail sticking out above an old high or underneath an old low. What do you think you should be doing? I've taught you a lot of times, if you're especially in the Discord already, you really want to be a seller above old highs. You want to be a buyer underneath old lows. Okay? Now, with turtle soup, watch this. Now, keep your emphasis and your focus on this area, right? And we're going to go down time frames. Okay? Now, this is why you want time-based indicators. Ready? Watch this. Now, the only thing about that is, right, notice how before I put the time-based indicators on, excuse me, this is literally, let me explain, okay? If I zoom in, I'm actually grab my charger shortly also. But if I zoom in, right, watch this. The yellow part is Sunday, so that's the weekend, okay? That's what it's a Sunday today, July 23rd, 2023. And I'm making this video. And so at these extreme points, you notice how they're either, right after the weekend. So this is Sunday night into a Monday, okay? Extreme point. The low of this week is on a Monday, okay? And it trends up, whatever. Let's go back. Week before that. And so, if the yellow is Sunday, if we open up on Sunday, this is London session here in green, if you can see it. The orange in the middle, or brown in the middle, I guess it's brown, right? Yes, brown. So, that'll be New York session, right? London into New York session, I'll say. And then red is like the ending of New York. And the black space in between is Asian session for me, okay? So it gives me my time. I can see what time it is automatically. So like Monday, Tuesday, Wednesday, Thursday, Friday. See what I mean? And so when I'm looking at price like this, right? And again, I'm looking at these extreme points, okay? Now, let's go back to the daily. Just so you can reference it, right? Remember what we were looking at before that. This is a turtle soup setup, okay? If anybody who knows me, they know my iPad is always dying. But that's whatever. So here we go. I want you to focus exactly on this candle's wick. And I'm going to give it to you one more time. Ready? When we come up from this consolidation, we take out this high. We trend up above. We make a new high. We trend down, taking out the low, right? And also, if you know, if you need extra confluence on why you should be a buyer underneath old lows, price just happens to jump into a what? Fair value gap. So we're also going to highlight that. You guys like fair value gaps, so do I. And we're going to highlight that. So, turtle soup setup, ready? Is when price gets back above this old high. And guess what you can do automatically? You want to be a seller. Okay? And if you understand a lot of times where I have my targets and why they're so accurate, right? Okay? I just did two things. I did it very, very fast. And a lot of people will think like, well, damn, why would your trade be just right there? Or why don't you expect it to go higher or lower? Two ideas, okay? With turtle soup, your expectation and anticipation of price giving you a straight delivery right as soon as it gets above this old high. Let's move in, right? Notice that as soon as this high is taken, it's only one day that trends up above. It stops right at 34,250, okay? And we are now fully bearish. This is a clear market structure change. These are the areas you want to be paying the most attention to, especially with like US 30 or NASDAQ or Tesla or HAL, or doesn't matter what asset that you're trading, you can find this happening all over the place. Old highs, old lows. And again, the reason why I'm referring to a daily chart is because you can see it so clearly. A lot of you guys are swing traders. So you ask me all the time, yo, what's the best time frame? What do you want to do? It depends. So if you're sitting there like, yo, I want to snap on my swing trading, okay? A lot of times I'll just give you a crazy turtle soup setup. And check this out, ready? The reason why you can do it like this, ready? If you see this old high up here, right? And I'm going from left to right. So we have one here. I'll highlight it. I got another high here. And again, very, very basic concepts, right? So I'm not going to talk about the turtle soup setup here that you can clearly see. But I'm doing this in terms of if we're operating in this zone or area right here, right? Let's say all this is already painted. This is long lost, right? But it's still useful. You see what I mean? So up here, old high. That's why I put my stop loss here, right? And again, it's not that I just told you that we want to be sellers above old highs. This will just be a better entry for me to do exactly what I want to do anyway, okay? But that being said, notice what I said before. We make this old high, we trend away from it and back to it. Once we jump up above this old high, it's a wrap. I know exactly what price is going to do. I know exactly where it's going to go. And I know it's going to be significant, okay? Turtle soup is literally trusting that once you get up above here, I'm actually going to jump into a sell position the moment that price is running up here and runs up above this old high quite a good bit, okay? When they purge liquidity or take on, right, the objective of jumping above a high like that, buy-side liquidity is getting purged. So all the stop loss, retail orders that are resting above these old highs, once they're attacked and taken out, price is now literally free to drop. It is free to drop. And look how significant it does. It goes this far. It goes really down here. But honestly, you can really run it to your nearest imbalance. You feel me? It's just comfortable. You already know price is going to gravitate to that. And look what happens every time price references this fair value gap. The first time, boom, one and done. Straight back to this old high and down, right? References it again, it actually fills in the fair value gap, runs it back up again. Is price bullish? Yes, for a short time. But you understand exactly what I just told you. The daily chart is king. So, understanding that on a daily level, this turtle soup setup, you can get not only the best entry, but you've really taken advantage of a clear low risk sell model. You feel me? It's very low risk. Check that out. And selling right till those inbounds. Start taking your profits along the way, and you should be fully out by the time you get to this inbounds. You can leave runners and things like that for sure if you want to. But at the same time, you see eventually it's going to, trickle back up. But not before it does what? Watch this. See that low down here? Yeah. You feel me? Okay. Let me grab this charger. But simply understanding, right, that when you're looking at price, what do you think it's aiming for? Where is it going? Ask yourself that question. And especially if you're on a daily chart, you want to have bigger trades. You want to have cleaner, smoother trades that go not just your direction or not just in your favor. But again, none of this is random. If price is completely algorithmic, this is what you need to do. You need to be paying attention to these extreme highs and extreme lows. Okay? Especially if you want to run something like US 30. This is easy to do. Again, imbalances and liquidity. If I've taught you nothing else, this is all you need to do. Okay? Watch this. Every single time. Long position. Right? As soon as you took these lows out, right? You could run it just like this. And now that's what? Order block. Right? And look, where are you going to target? Old high. So now my focus has changed. Using that as a target. Okay. Watch this. Notice how price. Use it like that. And the reason why I'm using this old low, right? This is called a long-term low. We're not going to talk about that right now. But, however, notice that when price gets... let's use another arrow right here. Notice how when price gets underneath this low right here, right? So you see this, we trend up. Every single time it's actually coming upwards, it's just only to rebalance, okay? It trickles down. Finally, this low is broken. So either you should be taking profits on this entire move downward, and you should be ready to become a buyer soon, okay? And again, US 30 runs really far, so I'm not telling you to operate just from a daily chart and to get in super early the moment this happens. It's going to protract super far. This is a lot of money downward. But it's just, again, if you're paying attention to what I'm saying, this is 100 times more money on the way up. Do you see what I mean? So if you're operating like this, find where, again, let it make this low. Let price give you that low. It's going to be easier for you guys to operate who are just learning or trying to get comfortable in the market to where this is going to be consistent for you. And again, this is not like a short amount of time. But again, I could go to 15-minute chart, 5-minute chart, 4-hour chart, hour chart. Hour chart being my favorite. If you operate this on an hour chart, it's going to be good for intraday trading. Do you see what I mean? But on a daily chart for when you're swing trading, you want to have insane swings? No problem. Watch this. Again, target this old high. Okay. Notice the price action from A to B. Let's check it out. As soon as it takes this old low, we run down, long-term low is made. We run up, super huge imbalance, and although it paints outside the line a little bit, right, you got fair value gap. Okay, let's take everything off the screen because I don't like when the screen is like that. It's just too much. But we'll put that back on the screen later. So check this out. You see where, again, fair value gap, it dips down a little bit. And the reason why prices get dipping down underneath this fair value gap, but notice the rebalance is clean. The bodies of the candles are respecting the gap. The wicks are not. The algorithm does not give a fuck about the wicks. This is only to come down into the high of this candle here. Order block. And I'm going to say this one time. Just because this is the last down candle at a support level, I'll say support level here, doesn't validate this only as an order block, but I'll explain that this is one of the cleaner versions if you're trying to learn how to start using order blocks. Okay. Very last down candle. We run up. Super, super huge day candle. It has to rebalance. This is not going to go one way by itself. Okay. It has to come down, fill this. And again, long orders are made here by smart money. So look what happens right from this order block. It trades into this down candle, trades up, away from it, back down, fair value gap style, into what? Another fair value gap. Do you see what I mean? Once you start to see this right here, order flow is bullish. Okay. Order flow is bullish. And what did I say about that low and that high? Ready? So watch this. Let's put this back on the screen. I know it's annoying. I know. So look, ready? Watch that. This is that whole area right here. Remember what I said about this high. Okay. So we're going to take that off the screen one more time. And we're going to make another highlight here. So imagine that is already formed, right? And so, once again, if you came in the marketplace and you saw this low taken out, that's like the short-term low that was targeted previously, right, from this down run. So once that's done, you have this long-term low made. I'm giving it to you twice so you fully understand. Now, here we go. Fair value gap. So you can run it from there, or you can run it from the order block, which is preferable because you have, again, that much more amount of, consistency in your idea. So not only is your confluence that price is about to be bullish, it's taking out this low. It made a long-term low here. Now we had an imbalance. Price is now starting to be bullish with order flow. And now this is really going to seal the deal here. Ready? Boom. And again, people ask me like, yo, where are you getting in? Where do you take the trade? As soon as price, again, not short. As soon as price makes an imbalance, right? It's going to run up. Wait for price to re-reference this area. Do you see this low in here? You should be right in this zone here. And again, anticipating this to either fill in or I'm not even thinking this is going to go 50%, honestly. It shouldn't. Order flow is bullish. So it's going to be what's called institutional order flow entry drill. Okay? Not to be all fancy on you, but there you go. Just like that. And you can either run it from that one, and this is how you formulate your stop loss. You feel me? End of this fair value gap is your stop loss. You can run it just like that. And does your target get hit? You tell me. You feel what I'm saying? And look, why do you stop just at this target? What did I tell you? As soon as that got taken out, what happened? Immediately. You feel what I'm saying? Turtle soup. It doesn't go back down to this imbalance because this is already rebalanced. So price doesn't need to re-reference this imbalance again. So it's going to come down, rebalance something above it, right? You see what I'm saying? Again, with these highs and lows. You feel what I'm saying? It's coming down to take out liquidity. That's exactly what it's doing. So price is going to run down. And what I said at the beginning of this video is all about narrative. Okay? So check this out. Boom, just like that. See what I mean? And what did I say? Price does not need to rebalance this fair value gap. It's already rebalanced. This high was your target. And again, let's run it even better from right where I knew it was bullish. So you can run it from that fair value gap, and you could target either 50% of that, run it somewhere in here, you feel me? Stop loss, big stop loss, right? But the only thing is we're anticipating so much more money, so I don't mind having a bigger stop loss. You feel what I'm saying? And honestly, you don't have to wait for all that. You can just wait till the price gets low and really start to get bullish in an area at a time that's relevant. We'll talk more about that later. So that being said, this is how you want to swing it. As soon as price gets down here and starts messing with this order block down here, boom. Now you're literally, watch this. Imagine this, right? Just like that. Now imagine you're down here as soon as price gets to this order block. Isn't that clean? Look at that. Look how clean that is. You feel what I'm saying? And as soon as price gets above that, you're going to let it run for a little bit, and then you're going to take all your profits and be done. Right in this area here. You feel me? Right in this area here. Take your profits, be done. Because you already know what? It's going to retrace. Okay? Now, that being said, this is where price is currently. Okay? This is where price is currently. Now, you want to run it again? How do you know that it's going to be bearish or bullish? Right? And again, this is a simple concept. Check this out. Ready? Trend line. Okay, can you move? Thank you. Now, you need a clear target and you need a clear entry, right? So I'm talking the next draw liquidity is really here. Right? See that? Oh, and you have another one up here that never got taken out. See how that was standalone by itself? Yep. So we're going to note that too. And you have another one up here. Again, all of these old highs are what my eyes gravitate towards. So let me zoom in again. I know it's hard to see. That high was never taken out. That high was never taken out. And again, very specifically. So you have to look at these things. When I talk about order flow, right? Again, because you could have been able to run it from down here and capture this entire move. It's very simple. It's very simple. Okay. I'll be back for part 2 in a second. All right. Let the iPad charge.